The ebullience that the stock market experienced in the first half of the year came to an end in the third quarter. We did see continued appreciation through July, but the S&P 500 peaked on July 31st and subsequently lost a little bit less than 7% through the end of the third quarter, through the end of September. Most of that decline occurred in September itself, which wasn't a total surprise given that historically speaking, September is typically the worst month of the year for stock market performance.
Equities have been going through a perfect storm of pain this past quarter. Treasury yields had a big move higher, the labor market has been very hot, and in the midst of all this, there were several weak economic leading indicators that were pretty concerning. Really a worst of all worlds environment. Normally, economic weakness pretty quickly leads to disinflation and a cooling of labor, but given the uniqueness of this particular economic cycle, which has been convoluted by the pandemic, that process is just taking longer than usual. So we're stuck in a chasm or air pocket of pain until this happens. Now, this is why investors are pretty worried about what to do, because there's no easy historical playbook to refer to as we are in uncharted territory.
The third quarter of 2023 was marked by rising rates. This is particularly true for longer dated bonds. This so-called bear steepening, where longer-term rates rise quicker than short-term rates, indicates that investors are finally coming around to the Fed's message that it intends to hold rates higher for longer.
Generally, in our bond funds, we are conservatively positioned, bracing for further volatility, but also ready for forthcoming opportunities that rising yields may present.
It's very difficult to add value by trying to guess how things might change or trying to tactically add or subtract from portfolios in an attempt to take advantage of various changes. Our position has always been that one should remain consistently invested in secular companies that provide a sustainable and identifiable competitive advantage, which one can anticipate will provide outperformance over the long term, over the cycle, rather than trying to time various market and economic environments.
Performance data quoted herein represents past performance and is no guarantee of future results. Investment return and principal value of an investment will fluctuate so that an investor's shares, when redeemed, may be worth more or less than their original cost. Current performance may be significantly higher or lower than data quoted herein. Performance current to the most recent month end can be obtained by visiting sextantfunds.com or by calling toll-free 1-800-728-8762. Please consider an investment's objectives, risks, charges, and expenses carefully before investing. To obtain this and other important information, which you should carefully consider before investing, about the Sextant funds in a free prospectus or summary prospectus, please visit sextantfunds.com or call 1-800-728-8762.